All right, morning everyone. Let's kick it off here. All right, we got a pullback, baby. Game on. Let's hope that there's a little bit of follow through. Either way, let's just hope there's some volatility that comes out of this. Hopefully, a spike in volumes and spike in volatility would be quite exciting. And this is, I think this has to be the start of something simply because it's the second time in 2 weeks that we've had just a monster spike in the VIX. Definitely bringing in a little bit of nerves. I mean, we're up 27% on the VIX last night. I believe 2 weeks ago we were up about 30%, 32%, something like that on the VIX in one single day as well. I mean, those are two of the biggest moves we've had in several years. And the fact that that's kind of coming, out from left field, will definitely get the market's attention. So I think this is important. We had a lot of things that went on over the last couple of days to potentially be a catalyst for the sell-off. I personally think the real reason for the sell-off was the big GDP print, which came in 1% better than expected. Definitely getting markets a little bit nervous that the Fed may come in and and be a little bit more hawkish in the near term. And we also had a couple other things. One being Argentina, which technically defaulted on their bonds. We also had the Banco de Espírito de Santos, or whatever it's called, out of Portugal, which they halted the stock yesterday for a good portion of the market. They're unable to make payments again to creditors, and they need to go out and try to raise capital. The share reopened. I believe it was down as much as 40+%. Obviously bringing real fears into to some of the market again. So I think, just when you think that there's nothing really on the horizon that can really make markets nervous, all of a sudden a couple things pop up, and that complacency that we had seen over the past few months, gives way to some vicious selling, obviously. We also had Nike off a little bit on the day on the back of a lowered forecast out of Adidas. Exxon also a little bit heavy on the day. They reported, I believe, lower production numbers. People a little bit worried that they kind of winding down some assets there. So anyway, definitely a really steep sell-off on the day. I think you can, all the individual stock stuff you can throw out the window. Market's down over 2% on the day. Very significant. All right, in Asia, we got very little follow-through, which was also quite interesting. We see, you can see the Nikkei, the Hang Seng, Kospi, all down more or less around 0.5%. The only one that really gave us anything significant was the Australian market, which after making some fresh 6-year highs or something along the lines of that, gave us 1.5% pullback yesterday. Driven down by a lot of the mining stocks and probably on the back of the European session. We also had some PMI numbers out of China. They weren't actually better than expected. They were better than previous numbers, and I think maybe just a little bit of relief. I think the expectation was for 52, came in at 51.7, but solid numbers probably on the PMI relative, and we actually saw Shanghai rally on the day. I don't know how much that means, simply because Shanghai kind of tends to do the opposite a lot of the times when you have big moves like this, but I think it's very interesting. This is about 6 or 7 sessions in a row that the Shanghai's rallied consecutively, so that's definitely something to take note of. We'll continue to watch that going forward. Okay, we got a cool chart here from Zero Hedge. Which, if you guys haven't been paying attention to the Russell's been pulling back as the S&P's been running ahead. We're 10, 12, probably more than that now, maybe as much as 14% off of the highs of the Russell, where the S&P is only a couple percent off the highs now, probably yesterday's pullback more or less off the highs on the S&P. But what's interesting here is that managers were taking money out of Ridex funds even after, even as the Russell 2000 was rallying. So, we have seen some of these kind of situations happening as of recently. I saw a chart yesterday showing the margin rates had pushed back basically to all-time highs again, and really overextended levels on the in the U.S. And so obviously that's what you're seeing. You're seeing some of these money managers taking money out, and a lot of these guys that are buying stock are coming in with leveraged capital, which obviously makes it a lot more susceptible to significant pullbacks, and the pullbacks being they're potentially fed on after that by by margin calls and things of that nature. So I think that's really important to note. All right. We had ArcelorMittal that was out this morning, the local company. Now, these numbers, if you look at the expectations, those numbers are actually full year numbers that we divided in half. So the expectations are probably a little bit out versus what they're expecting for the half year. So that's important. We've got a loss, a headline earnings per share loss that came in there for, if you take the full year numbers and take the half, obviously you can see they were expecting a profit. Revenue numbers also potentially look a little bit light. No divvy per share. So just keep that in mind, that the expectation numbers here could be a little bit off. So take it with a pinch of salt. Obviously, we also have more earnings coming out of the States today. We've got Procter & Gamble, we've got Chevron, and then we've got SAB and Anglos, which are going ex-div on Monday. So keep that in mind. Last day to trade today for SAB and Anglos. Those are U.S. cent divvies right there. So quite significant dividends coming out of both of those shares. All right, market data today. Like we said, we had China PMI numbers, which came in. Sorry, the PMI number was better. It's the HSBC number that was worse, and the HSBC number I think is more reliable than the government data. A lot of people don't, including myself, don't fully trust a lot of the government data that comes out there. So the HSBC PMI number was a miss. The government PMI number was a beat. So just let me correct myself on that. We also had PMI numbers out of Japan, which came in a little bit lighter than the previous month. We have PMI pretty much coming out across the region out of Europe and out of the UK. We've also got local PMI here coming at 11, expected at 45, so keep your eye out for that. We've got change in non-farm payrolls, which is going to be the big number here at 2:30 today in the States, along with unemployment rate, personal income, personal spending, the U.S. PMI, Michigan confidence, and ISM manufacturing. So just loaded with data today. I think, again, I think this is really important. If we get another big positive print out of the U.S. today on non-farm payroll number, then I think that and unemployment rate and personal income and spending, all of these numbers, if the bulk of the numbers come in to the upside today, to the better, then I would further expect us to get a sell-off today on the back of that. Like I said, I personally believe that that's why we sold off so hard yesterday, was on the back of the previous day's GDP number. All right, let's get into some maps. Okay, the first one we're going to look at here is the Aussie. Right. Yeah, we got one year up here. We'll pull this forward a little bit. We showed this chart 2 days ago, and we showed us popping out the top of this little wedge pattern, looking now to be a brilliant head fake. And we reversed very hard the last two sessions, obviously more than 1,000 points. As to this morning, which we're down here, over 1,000 points. Yeah, yesterday, up to yesterday, it was close to 1,000 points on the 2-day pullback. This morning, you can see down here at 46,000. There is some support down here at 46,000. I think minor support, but bottom line is, we've got to drop this, and I think that we can really see some significant downside here. I don't see any real major support levels coming up anywhere in the near-term charts here. So this is definitely important. I think we dropped 46,000 today. We can really get some momentum to the downside potentially. All right, let's look at Discovery here. Discovery, back this out a little bit. Discovery dropped support on yesterday's session. You can see here the support level being about 94.80. We dropped that convincingly yesterday, closed at 94. I think we're going to be looking for something similar to the height of this channel, which is probably about 4 Rand. So we're probably looking for 4 Rand at downside. Going to take us down closer to $90. on discovery. All right, Harmony. If we look at Harmony here, you can see we dropped a little head and shoulder pattern here yesterday on yesterday's close. It's not incredibly definitive, but definitely looking a bit head and shoulder-ish, and probably setting us up for a potential pullback of about 2 Rand below the 33 level. So watch out for that. All the gold's kind of really rolling over here a little bit. Anglo Gold finally giving us some real pullback yesterday. Also dropped a little bit of support. These charts looking somewhat similar. I think the major support level here in Anglo Gold's at 80. We drop 80, then this thing could really accelerate to the downside. But all the gold's pulling back on potential of higher rates. Gold price coming off a little bit in the last couple of sessions. All right, BVT. Look at Bidvest here. Bidvest potentially looking like we made a double top. In the recent bounce up here. I mean, especially when you back out of it, those are the kind of setups that can really look indicative of double tops, especially if we continue to get retracements. Last 2 days of pullback, very significant. We came off as much as 3.5%, I think, from the highs. So just watch this one closely. I don't see any reason why we can't make a major reversal here and really trade back down to at least 280 support in the next couple of days and potentially even lower. All right, CFR, we showed this one a few sessions ago. We had a little bounce up off of support here and really just failing over the last couple sessions and coming right back down to trade right at support. I just wanted to back this out to 2 years so you get a good idea for the magnitude of the run up that we've had, the length of time of consolidation that we've had. And we've really been making a bit of a broadening formation here up to this level. If we zoom it forward, you can see here very clearly that we close right on support, which is at 102. If we drop 102, I really think that there could be some significant downside. And in this one, the one worry here probably being the potentially weaker Rand that comes out of a real sell-off, but CFR definitely probably going to be under pressure if we can get under 102 and hold down there. All right, and the last one I'm going to show is Anglos. We'll make a little revisit here to our Anglo chart and show the breakout that we had again a couple sessions back. The level's at $88. We closed at 89.62. So watch this 88. We'll call it 88.50, whatever it is, somewhere in there. I think I would look for 88 to have to drop convincingly because this little pullback, if we can hold into 88 the next day or two, then it could be a really nice opportunity to look to buy this thing to move higher. I like the setup here. I think the market really likes the story of what they're looking to do, and buying on support here if we hold in the next couple sessions. If we start to reverse up off of this could be a great setup to really take this up through 300. And that's it for today, guys. Good luck out there.
Next show. Good boy. How you doing? Thanks, guys.